Hello. Hello, hello. All right, give me 1 second. Let me just announce that we're live. All right, so honestly, like going into today is essentially we have a massive. Actually, should I wait for people to get in first? Yeah, good morning, Harv. Good morning, Yiji. I hope I pronounced that right. Oh, nice to see you here, Classy Lee. Good morning, Clyde. Clemson Trades. DJ Mags, Primo, Actual, I think. Sean, K Cooks. I'm gonna remember these names forever because you guys are the OGs. Oh, Shipwreck's up in here. Okay. All right, who's ready to take a full port position today? Today's the day. I can feel it. Might have to drop at 9:05. That's fine, Classy Lee. This will be pre-recorded and uploaded to WAP afterwards, so you know, no worries if you miss it. Everything is recorded. Like weekly reviews are gonna be recorded, Q&A is gonna be recorded, everything. And then there's also the Tuesday streams. Now, the reason I put those streams on Tuesdays, like sometimes we'll get trades, but most often than not, like Tuesday is more of a low probability day. It just really depends. It's like, if you guys are familiar with quarterly theory, then we're looking at XAMD this week is what I'm anticipating. Right. So here we actually had like accumulate like a large range accumulation because we had news on Monday, which is pretty rare to be honest. So it looks more like AMD, right? And then now we're in that X stage, which could be a reversal. And why do I think it's going to be a reversal lower is because we have SMT on the highs right now, with a YM specifically. So if we continue to get displacement lower, then I'm expecting lower prices overall, like all these equal lows, for example. Super clean, right? But until we get that displacement, I'm not really too eager to enter on the market. Right now, we are inside this 1 hour unicorn model that I have highlighted pre-market, and I was anticipating this was going to form, but I don't know if it's going to hold. So right now, what I'm waiting for is 5 minutes to confirm. But what else do we have right here? We have an SMT divergence on the lows here with ES and YM. So this could have been your turtle soup entry. And so right now I'm looking at these highs because it doesn't look like we're stopping anytime soon. If we're looking at DXY, right, this was my drawn liquidity, which is why I'm leaning bearish. Like I annotated last night, we had SMT divergence down here with EU. And we started expanding higher, going for these equal highs. And if you guys have watched the weekly review, or weekly outlook, sorry, then we would all understand that right now I'm just looking for higher prices overall, especially because we dip back into this fair value gap right here, I see, and then it's in alignment with time, right? So we can pay attention to this wick right here because it's the highest wick right here. It's overlapping with that fair value gap. We can look at that as a breaker, right? A sensitive part of the breaker. It seems like we're pushing higher from it. Have SMT divergence on the lows. So my ultimate draw is higher. And to be honest, as in the weekly outlook I annotated, is I would honestly like to see this gap inverted if we're going to continue bullish. Because once we know that this fair value gap specifically has been respected before, so now we can look for it to act as support and resistance because it's been respected before. So if we're in a market maker buy model, then I'm anticipating that this high, yes, we purged it, right? That's my first target. And so after we purge this, we can see some sort of retracement. And then ultimately, I want to see expansion above, maybe a retest of it, and then use it as support and resistance, right? So it's just the same concept. And this is why before in the free or in the public community, in the homework, I would be like, when does retail support and resistance really work? Well, it's not really. It's like when you have a high and a fair value gap trades through it. That's essentially when it like generally works, and it's time-based liquidity. That's the important part, is time-based liquidity, right? And I'm very excited to share with you guys the course I'm creating right now, because I feel like it highlights absolutely everything that is like you need to know for advanced stuff. Does that make sense? It's like ICT teaches everything one by one, but I feel like if he taught that overall we're just looking for market maker models, right, then that would be so much easier on a lot of people, because they're like majority of ICT traders, they just don't know what to look for. In my opinion, it's like they don't know what, like it all comes down to higher time frame context, right? So that's just the format I'm going to be teaching it, and I hope you guys enjoy it. It'll be on YouTube, so if you guys want to watch it, you can. But right now it's still in the works. I'm also going to cover quarterly theory, just like a very broad overview, because it is a part of my model. Of course, all credit to Trader Day. So if we're expecting DXY to push higher, then I can expect NQ and all these to push lower, right? So watch how we're reacting right now to this unicorn. We have an SMT divergence here. It's not really providing much of a setup here. And let me tell you why, because DXY is pushing higher. So when DXY is going in one direction, then it makes it difficult for other assets to move in the same direction. So even if NQ was bullish here and DXY is moving higher, then you'll see price action that's not as clean. It's more choppy on the way up if you make high resistance liquidity run, right? And so from that high resistance liquidity run, what does that generate? That generates low resistance liquidity that we can look to trade back into later on. So for example, right here, high resistance liquidity run, right? Because it's struggling to get down, struggling to get down, struggling to get down, so finally gets down. What does it generate though? A lot of buy side liquidity right here, right? Yo, what's up, Bacon? What's shaking, Bacon? Right now, we're kind of just in some consolidation chop. But once again, this is why we wait for time, then price, right? So 9 to 10:30 is the time I'm looking to trade. Right now, I'm looking at Q1 as consolidation. Q2 7:30 to 9 o'clock, right? It looks like we're manipulating the highs right now. We also manipulate the lows, which is why right now all I'm waiting is for SMT divergence within this hourly unicorn. And if that happens, then I'm pulling the trigger and taking a stab at the market. But as of right now, it looks like a long setup until we get that. As you guys spend more time with me, I think you'll start realizing or noticing that I always keep two biases in mind. And the reason is because you just have to be nimble, right? It's like, yes, going into today, I would like price to go lower, but we've already swept this low and we manipulated higher. So now I'm waiting, right? If this stayed intact, we manipulate the highs. I'm all for it. I'm full porting short. You know what I mean? But because this has happened already, I'm keeping an open mind so that I can adapt to the market if we are going bullish for these highs, for example. But we also have high impact news today at 10, I believe. We just make sure. Oh, we had it at 8:30 already. I am not on my shit. Oh, that's why we had this. Okay, that makes complete sense. I think that these highs are a very possible draw, but I'm still leaning bearish as of right now. I am aware though that on the 4 hour we've tapped into, once again, when does retail support and resistance work, right? So that's what I'm looking at right now. Is like if I'm short, then I want to see displacement lower from this unicorn, which is not happening, right? So if that's the case, then right now I'm waiting and seeing. I think we're gonna go higher, just because we have SMT divergence here, market structure shift. We get that 2022 model, right? Yeah, DXY, like when they're moving in tandem like this, it's just low probability. That's not something we want to involve ourselves with, because right now, imagine you're a trade right now and it's just chopping around like this. That's not something you want to be in, right? You want to be very highly convicted of your position. You can also, here, we can do a tape reading exercise, is looking at every PD array essentially. It's like right here, I see that we have an order block. So let's see how we react to this order block. We traded back into it, and now we need to see displacement higher if we're truly bullish. What else do we have? If we're on the buy side of the curve right now, then this inversion fair value gap is what I'm paying attention to as well. Within this inversion fair value gap, what happens? We create an order block. That's very significant. You're stacking all of these high probability things together. So I low-key might actually take a stab at the market here, just because it looks pretty clear that we're going higher, but I don't like how we're not getting like acceleration. So I'm just gonna wait until we get some sort of displacement. Maybe 9:30 will present some sort of manipulation play that we can get into. I think one of the very core fundamentals of how I trade though is being aware of what's happening in the opposing side of the curve. So it's like if there's a fair value gap here, you have to be aware that there's a fair value gap on the opposing side that was respected before. So when we trade back into it, we can use it as support, and we can look for PD arrays within this area, like order blocks and stuff like that. And that's also why you'll see like sometimes you have fair value gaps down here, it doesn't go back in. Why doesn't it go back in? Is because you have other PD arrays holding price from going to it. Does that make sense? So let's say this is a breaker block right here, okay? Let's say we have a breaker right here, and then we have a fair value gap right here. Well, why is this one sometimes left open? Is because when price trades back into this breaker block, that's all it needs to do, right? Breaker block, maybe you have another fair value gap here, breakaway gap. If this gets left open, you're flying. Market's going to accelerate in your direction. What do you want to see once price hits this level? You want to see speed through that level, right? Because these are little speed bumps in the way. Does that make sense? I'm kind of just ranting right now, but 5-minute inverse fair value gap is what I'm looking at personally, but waiting for 9:30 to provide confirmation. Clear, yes. It's like right now, if you use Dodgy's model, I assume that you could use this inversion fair value gap, right? And then you can target this high right here. But once again, not a play I'm super interested in personally. You guys could go for that if you want. Stop loss is when we close below the inversion. It's like, the thing is, like, whenever I rant and stuff like that, it's like, listen, I feel like yes, I can provide value and stuff like that, but it's kind of not what I aim for in terms of education, because it's not structured well. Do you know what I mean? Like when I rant, I'm just kind of telling you guys things. Whereas if I create a course around it, then it's structured exactly how I want it structured, and I can pre-plan each step of the way. It's like, oh, number one, I think the number one thing you should learn is this. Number two is this. You know what I mean? So with these rants, like I feel like they provide value, but it's also confusing. So like whenever I rant, yes, I know, like I feel like I know what I'm talking about, but um, take it with a grain of salt because I don't want to misguide you guys, if that makes sense, or mislead you guys. Once you see that displacement and price is disregarding opposing PD arrays, when you enter, are you managing your stop loss? Find once price extends and shows its hand, I struggle to find the correct position of the stop loss sometimes. Hopefully that makes some kind of sense. Yeah, so it really comes down to that market maker model is how I manage my stop loss. And that's why like sometimes you'll see in my trade executions like, oh, price should not go back here or acceleration from here. It's because I'm just paying attention to a market maker model, right? At the end of the day, it's like if we're truly bullish in a market maker model, when we take this high, I need to see some sort of acceleration higher to confirm we're in the market maker buy model. You know what I mean? Right? It's like right now, does this look like a okay, I'll draw it out for you actually. Okay, let's just imagine we have some like phases, right? And then we get consolidation, manipulation above here. Does this look like a promising market maker model to you? Just on a diagram. Does this look promising to you? Does it look high probability? What looks more high probability? Which one you want to trade? One or two? One or two? Exactly. Like, does it look like the market's showing its hand right now? Not really. Exactly. So that's why I'm not in this trade, if you're wondering. Yo, I actually went like crazy on this PDF I just made for Jesse. So like it's a 3-step process to finding daily bias, and I think I actually went like insane. You'll see it, but I spent 6 hours creating that masterpiece. Oh wait, that's an hourly. I'm actually trolling. Or was meant to say, how are you positioning your stop loss at say the correct low or PD array? I find sometimes the one I chose on the lower time frame gets swept before moving again. Yes, so when you see that sweep, it's actually so in market maker models. I'm not sure if I taught this before. Whenever you have a phase that ends, you're most often than not, actually pretty much always, you're gonna have this manipulation, right? But how come sometimes it doesn't manipulate and just expands? Well, SMT baby. Yes, sir. See how powerful SMT is? It tells you when the market's about to move. This is why SMT is so important. And this is why in my execution videos, you'll see once I enter, price just expands right away. When you see ICT enter execution, price just expands right away. Why is that? SMT divergence, baby. And also, of course, time of day. But you just have to understand like what time is high probability, and I'll cover all of that when I get to like quarterly theory. But for now, just know Wednesdays from 9 to 10:30 is your highest probability session. Okay, just look for SMT divergence within 9 to 10:30, and like you'll probably find an amazing setup, to be honest. Who long this? This is like textbook entry right here, except it's not in alignment of the higher time frame, right? So I just wanted to say that because whenever you're not in alignment of the higher time frame, then you'll see stuff like this. That's a very key thing, Snows. Remember, the three things of my model is that's it. Oh, let me add the last one actually. Boom. This is my model. I recently just started like putting this on blast because it's really like it's so simple, isn't it? Balanced price range is not the same as inversion fair value gap. Inversion fair value gap, you could have like close it if that makes sense. So it's like, let me look for one. Oh yeah, right here. So this is like an inversion fair value gap right here, right? But there's no bullish fair value gap through it. Does that make sense? Whereas this one we have a fair value gap, and then we have another bullish fair value gap. That would be a balanced price range. So you have a balanced price range here. You have an inversion fair value gap right there. Yeah, so you need a bullet, two fair value gaps overlapping to be a balanced price or BPR, right? And then for inversion fair value gap, you just need the candle to close above it or below it. And guys, remember what I just said, right? If we are bullish and we're within this hourly fair value gap, see how we're respecting the midpoint? If we trade through it, we should respect it again at the midpoint. That's something, if you use time frame alignment correctly, you will see that. So right now I'm using an hourly fair value gap. I'm using 5-minute candles. If we see resistance here, we should see support at the midpoint again. Okay. And on top of that is we'll most likely get some sort of SMT divergence on the lows here. The market's telling us time to low resistance liquidity run higher. You know what I mean? That's essentially what it's doing. I just annotate everything for you guys, so those that are more new, like newer, you can follow along. Wednesday is daily Q3. New York AM is session Q3, and then the time is Q3 inside of that. Yes, sir. Q3 of Q3 of Q3, baby. Um, I feel like I've said baby more times in this stream than I've ever in my life. Okay. The market not at a higher time frame PDO rate. Yes, so that's something very important. Snow. Isn't BPR the same as oh, okay, we just looked at that. Yeah, I just enter off the balance price range creation or like honestly, like recently I've just been entering off the liquidity sweep. I'm not gonna lie, like I've just been turtle soup entry. It's been pretty crazy. Like I'll just enter here and then Trader Day taught us how to place our stop losses, right? But that this would be the trade idea. Wow, guys, what a high probability session. Wow, I really thought the day to trade would be the day with high impact news. No, gotta wait for that 9:30. Getting some SMT on the highs right now. Unless this high gets taken, right now we're kind of pushing higher. So at this point, I would just drop down to the 15-second and look what's going on, right? Actually, I probably shouldn't show the 15-second. I think that's very confusing for a lot of people. So I'm just looking at this high right here. If you look to the right of my screen, there's two more charts. There's ESYM and DXY. I'm looking at this 840 candle, right? SMT divergence with YM. Low key looks like a good short here. But we're going to be patient, wait for 9:30. Take a look here. The thing that makes me a little less convinced is just this SMT right here. But once we create a new SMT, we can cancel out this SMT. So honestly, see how this candle closes, and then I might hop in here. I'm not gonna lie. Take 0.5% risk. Where is bearish SMT? Right now we have bearish SMT right here. Once again, I want to be patient because I need this to confirm on the like right now on the 15-second, because that's a time from alignment for a 5-minute, right? So on the 15-second, it doesn't look very convincing that prices wants to go down yet. So just gonna be patient here for now. Still chopping around. Another thing to take note of is we have Q1 being accumulation, manipulation, and Q3 is supposed to be distribution. So if this is the manipulation here with SMT, then it looks more bullish. If we had an SMT with right here and we held it, then I would be more convinced to go lower. Snows, yes. So the most recent, I would just pay attention to the most recent SMT. Yo, what's up, Daniel? Good morning. The bearish SMT has been invalidated, by the way, so I would just keep waiting. Once again, not the most beautiful structure here. So we just sit on our hands, right? Because we want to make sure it's the most high probability. ES failed to take that high, I believe, made equal highs. I don't really like this reaction though. It's like we're just stalling within a hourly fair value gap is not like ideal. So right now we have SMT with ES still. Just waiting for that. We also have equities open in 9:30 at 9:30, so you might want to be careful entering a position so close to 9:30 with that volatility injection. But honestly, like as of right now, I think the only thing that I can see is that NQ does look bullish and wants to go for this low resistance liquidity above, but DXY is also bullish. So you'll end up seeing stuff like this where it's high resistance going higher. And that's why it's like when they're moving. Wait, what just happened? Wait, did I disconnect or no? I just closed my Discord by accident. Anyways, when they're moving in tandem, um, it's just low probability. Do you choose the asset you trade based off the SMT or stick with NQ? So basically, how to determine which one you want to trade is the one that creates the higher high in the SMT, for example, is going to be a cleaner trade, whereas the one that makes the lower low or lower high, for example, is going to be more volatile. So it's going to go further. I personally always do the one that makes the higher high or lower low because I just like a cleaner trade, so I can manage my trade very like precisely. Yeah, exactly. And even like for psychology, like it's just psychology wise, it's like it's just nicer to have that high resistance liquidity right before your trade, because it's like if you're putting your stop on like equal highs, for example, that could be kind of nerve wracking. Would projections be from the 805 high to the 830 low? 805, 830 low. I would say like if you're projecting things out, what is happening to my microphone? If you're projecting things out, then I would use the most recent manipulation leg, right? So that would be this low to the 815 high. So 830 low to 815 high. And then you can project your -2, -5 standard deviations. And then I'll teach you guys more about projections in the. I mean, I can't really like. I feel like it's hard because I don't really use it in my model. I just use it for targeting. But there is a way to use projections to determine the beginning and the end of each market maker model. And you can also anticipate for silver bullet to occur within specific zones, which is like really cool. I learned that from Trader Dexter. So, check them out if you want. Really cool stuff. Here we go, ripping higher. If you want, we can also look at this. Over here, this hourly fair value gap. I forgot to annotate this earlier. This actually looks like a really, really good long. So I might go for a long here. I just want to see SMT divergence within one of these phases. If it doesn't give it to me, then that's fine. So now that we can see, like, you see how I'm using that higher time frame PD array, right? We can see that price is just disrespecting it essentially. If we were going to use it, then this breaker right here, breaker with this fair value gap, we should see displacement lower from it. But we kind of just chopped around, which is not something I want to see. So now we can refer back to our bullish PD array, which would be this hourly fair value gap. So I can annotate it here. And then we can look. What did I just do? I'm just gonna make these red because these are like important areas of price. So if you look here, right, higher time frame PD array, turtle soup, can look for a buy. So in terms of framework, this looks the cleanest as of right now for the lower time frame. But higher time frame wise, I'm still paying attention to this SMT divergence. If it doesn't hold, then all of this low resistance liquidity all the way up to here. But we'll most likely get another turtle soup entry at 9:30, whether that be on ES or NQ. So I'm just gonna wait 30 seconds. Oh my god. I just choked. Dying. Oh, that was terrible. Just choked on my coffee. Turtle soup is a liquidity sweep, essentially. But what makes a turtle soup is SMT divergence, in my opinion. You might get other explanations, but that's my opinion. I'm sorry, my voice. My throat is like dying. I just got a coffee from McDonald's, to be honest. All right, we're back. We're good. We're good. Restored to perfect health. So right now you want to look. Oh, what's happening over here? Oh, another SMT divergence, right? So this could be the Judas swing. 930 Judas swing. Yeah, so you can pay attention to the 1 hour, but it hasn't like closed, right? Like this is the 1 hour, so I have 28 minutes. So in terms of paying attention to the candle body, if we get a closure and start displacing lower, then we can resume using this. There's also a 1 hour order block right here, or propulsion block, sorry. So some things you can pay attention to if you're bearish. But right now we do have we have another SMT, right? So that's something I'm paying attention to. Uh honestly, don't worry about propulsion block. I like it's not needed. It's basically it's an order block that taps into another order block and it creates that propulsion block. But it's really not needed. It's just something it's because like I studied ICT for a long time, so it's just like yeah, like a mega order block. I'm gonna take one. I think I want to sell here. I'm gonna sell here. I'm gonna take one contract sell, and assuming this high right here should not be violated. This is also order block. I would like to see some sort of acceleration lower from here. This is where I need acceleration though. If we don't get acceleration, then I'm not very confident in this setup. No. Thoughts behind the trade? We have a turtle soup up here. SMT divergence right there. And then 5 minute, we're looking at another massive SMT divergence of the highs, right? So once we had this massive shift lower, we have this fair value gap right here. Breaker block here. Holding price lower. This high on 932 candle is what I'm paying attention to because this high is on YM. It took the higher high, right? So because we have the SMT divergence, I'm assuming that this candle will not be violated because this is also an order block or actually a propulsion block, but you know, that's just what I'm paying attention to. I might get stopped here though, I'm not gonna lie. And I'm stopped though. Let's go back, zoom out, and see what's going on. I see like YM is still going lower right now, so I'm just waiting. I have one more bullet for today, and if I get stopped out or if I win, like win or lose, like that's it. Like just 2 trades per day. The rest just tape read it. So right now, I want you guys to pay attention to what YM is doing. So we have a turtle soup right here. So if this is a market maker buy model, which I think it's pretty obvious at this point with this expansion, we could go for these highs right here. That was just offside, unfortunately. How'd you make the forest charts move together? So at the top right here, you just click on this little button and then you can change how you want to lay it out. So it's like 2 charts, 3 charts, 4 charts. And then I just choose this layout. Oh, yeah, yeah, yeah. Sorry. Like over here, you have interval, crosshair, time, date range. Like I turn all of those on. The only thing I don't turn on is symbol. I think I might take another stab. I would like to see SMT divergence preferably. Like we have it with DXY. I think I'm gonna. Oh wait, it just expanded. Okay, I guess I'll wait. This looks like a pretty good sell, though. I'm not gonna lie, in my eyes. I just wish we had SM. Oh, we did right here in this little accumulation. Preferably, I'd like to leave this liquidity here so that I can like find some sort of entry. Um, what my eye is drawing to right now is just looking for some sort of premium entry if possible. But we just ran it, and if we get acceleration from here, then it's not really looking good for an entry. Maybe we just missed the trade. Should I put this here actually? I feel like if for transparency's sake, I'm going to put this here. Today's -1R short. Just for transparency's sake, I'm just gonna like I need to show you guys my losses too, right? If you guys are like trusting me to teach you guys. Low key. Let's see if we get along. Into low resistance liquidity, and then there's the last final stab I take at the market. All of this has been purged. I'm just gonna buy one contract here and then stop loss below these lows. And this is the final trade I'm gonna take today. If we are going for the low resistance liquidity up here, then that's what I'm looking for. I don't know, today might not be my day. So I'm paying attention to this breaker right now. I want it to support price, pretty much. Then we now have inversion fair value gap right here. possibly. So these are all like, if these all get violated, then I'm not super interested, and I could probably move my stop a little higher now. I just want to see how price reacts. I would like to see displacement higher if we are onside. I'm 22. If you're for those that are wondering. Not very convinced we're going higher as of right now. Just from PA, it's not looking promising. This is where I would just want to see acceleration higher, to be honest. This is like last chance essentially. If we're going higher, it's now. Moving my stop higher here because breaker, propulsion block, and inversion fair value gap. That's 3 PD rays right there. If we invert this, that's what I'm looking at right now. This fair value gap, because it's a balanced price range. If we're able to invert that, I'd be a little more confident. Right now, we're kind of just bouncing around. Nice, good shit, Daniel. Is this on a funded account? Yeah. And then I also have a trade copier for a challenge. And if this trade goes to plan, then I pass the challenge. But if not, then a little setback, but it's okay. Trade copier, you just use Trade of 8. They have like group trading or something like that. Group trade as one of their add-ons. So a little more conviction that we could go higher now. Just this displacement is very telling. So I would like to continue displacing to be a little more confident, but this is what I'm looking at, this breaker right here. Right? Reason I deem this as a breaker is because we have SMT divergence right here. On these lows specifically, there is SMT divergence right here, so I would like this to hold price higher, and I don't really want to see it drop back lower. So at this point, I could just trail my stop a little higher to this SMT low, which occurs at 946.45. And right now, we are in another speed bump, so we can pay attention to these bearish PD arrays. This is another speed bump. So if we want to get it past this, we're going to need displacement through it, right? We're going to want to turn it into support. Not super happy with how like high resistance this is though right now. It's just needs some sort of displacement. Because if you look at the highs, we also have SMT divergence, which is not great. Moving stops to break even essentially. And we'll see what happens. Because like if I wanted to be in this long, price should not go below here. And that's just my plan. So once again, once we like pretty much break this, if we displace above this high, then I'm looking, I can move my stop already to 950 candle low because that's also another SMT divergence. And if it's gonna be SMT divergence, I want it to hold, right? So you can also look at it as an intermediate term low if you're looking at advanced market structure. Um, just because it rebalances that inefficiency, right? And then we start trading higher. So that'd be an intermediate term low that I don't want to be violated. So now that we've traded above this fair value gap, I'm looking at it as a inversion fair value gap and I want a close above it. We got to close above it. Now I want to see support. So I can look at this order block, right, that occurs within this fair value gap that just inverted as some sort of support. So I'm looking at this down close candle at 951 right now, paying attention to that candle. And I want to see price respect this. And if it does, then this turns into a breakaway gap. And so we'll see price fly if that happens. So I'll highlight that right now. Anticipated breakaway gap right here. Let me play some music to calm my nerves because I have an audience. I'm like hella nervous right now. I've never traded in front of other people before. This is the first time. So once again, I'm really paying attention to this inversion fair value gap. This gap, I want it to stay open, preferably. And if this stays open, we can anticipate for price to start just flying. Past this high, paying attention to highs, right? This high, this high. See how price reacts to it? I want to see speed past this high, which we didn't get, which is something that you need to note because like if we're bullish, then price the algorithm will spool higher, right? I love trading high resistance liquidity runs. So now that price has broken above that high, I'm anticipating this should be a breakaway gap. Now I can move my stop loss a little higher. And you see how whenever I move my stop loss, there's logic behind it, right? And that's just how I keep a high win rate is by managing my trades like this. So that way I can be like, okay, when something I don't like occurs, then I just instantly want to get out. Um, Another thing you can pay attention to right now is these up close candles were bearish order blocks before, right? So once we trade above it, we can look at that as a mitigation block where we're looking for other PD arrays. So here we have order blocks. So I'm anticipating that this propulsion block, because it trades into another order block here, propulsion block, then I'm anticipating this one should hold price, especially because it's at the midpoint of the mitigation block. So some things to note. But I just don't like how we're wicking above it and just like falling back into it. Does that make sense? It's not the clearest sign of what I want to see. So if I get stopped out here, we're gonna be at break even essentially on the day. So it's permissible for NQ to actually dig lower here, in my opinion, because we can get an SMT divergence right here. So I'm going to move my stop loss a little lower again, back to that breakaway gap. If we take this low, I would like to see acceleration higher, which we took that low just now. So this fair value gap within here, this fair value gap, I would like to see that invert. Beautiful. Acceleration higher past these highs, preferably. I can move my stop loss to this low now because this should be the SMT divergence. Bro, my anxiety is like through the roof right now, though. It's just like, I don't know how to explain it. It's like having people watch me trade is just like, take a deep breath, you know what I'm saying? Woo! I want my terminus to kind of be up here just because I just want to get out of this trade at this point. Like, my anxiety is kind of getting to me. So that's the terminus point. Right now, we're just within this, managing our trade. It's also super high resistance liquidity. You know what high resistance liquidity breeds? Low resistance liquidity. So at any moment, all this purge. Yeah, but you see the lack of displacement above this high is just not super convincing. If I get stopped out here, I'm perfectly fine with that. Stopped out, and so we are now plus 1R on a long. Total break even. No, I didn't pass. I'm break even on the day. But it's okay. We're good. It's like when we're here at this point, it's like I've seen so many of these play out that it's like when it's so choppy, high resistance liquidity run, it's just like you don't want to be in this trade pretty much. You know what I mean? It's just like get me out. But if you're in a trade like this, for example, this quick sweep lower, that's a trade you want to be in, right? And the reason I couldn't get in is because there's no SMT on the highs, unfortunately. But you know what I mean? Also, I think that I put my stop a little too tight because it literally tapped my stop loss. It was too precise. Note to self, leave a tick of room. No, they've got it. Okay, you know what? Still W trade though. You know what? I feel like I still managed that trade very well. I called it very well, I feel like. So you're insta because of one tick? Yeah, this is where you should take partials. I'm just saying, because you're above a high and like, look at all this low resistance liquidity. That's scary, bro. Anyways, I'm done for today. Like that's all the shots I get, right? My risk management plan is 2 trades per day. Once you're done, you just tape read. And listen, tape reading, it sounds boring, but it's how I trade manage. Like you see how I was like just tape reading all the way up. You need to practice the skill before you can put it to use. You know what I mean? It's okay, Daniel. I really think when I start releasing the course content for like my model, like, cause I'm gonna have two series. I think one series like, I'm gonna name it. This is how I got funded with 500,000. Episode 1 or something like that. And then, do you think that's a good clickbaity title? And so that's gonna be the course that covers my model, and then the second course will just be like everything on ICT that I know. Yes, I do think I could have held it, DJ Mag, but this is where I would take a partial. This is a 15-second market maker buy model already, right? So partial there. If you're trading the 5 minute from this turtle soup, then you can hold, in my opinion, to like these highs even. Um, but yeah, just for my anxiety's sake, this right here. This right here is uh, you know, where I want to get out. Low hanging fruit. I'm happy with that. Especially when you're seeing high resistance liquidity like this. It's not a very pleasant feeling when you're in a trade. Let me just use projection swings here. Just check. Yeah, so that -2, -2.5, we expect some sort of retracement, which we did. We dipped lower. We create that SMT divergence. Very good. And now where are we aiming for? We can aim for the -4 to -3 standard deviations. This is the next target, essentially. Look back in time. What do we have here? We have a high in here. So that's our second target. And then if we displace past this point, then you can look for that -5 to -5.5 standard deviations all the way up here. So just some areas to look for using standard deviations. And like I'll teach how I use projections going forward. If you want, you can also use the I believe it's -1, negative. Let me make sure. Yes. So this, okay, so once you tap into -2 to -2 2.5, then you can look for -1 to -1.5, where this is your silver bullet zone. Okay. Here's where you look for your setup. For example, you have this inversion fair value gap, where you look for whatever your setup looks like. Okay. So once we hit that -2, -2.5 standard deviations, we can look for a retracement back into that -1, -1.5 for silver bullet setup. And why is it silver bullet? ICT's favorite setup is because here we have 10 handles, right? Yeah, that's 20 handles right there. Once we trade into it, instant low resistance liquidity to target. Boom. So this is something so this is just something you can look out for. Super, super cool stuff by Dexter. So, how did you guys feel about today's session? To be honest, I would like your thoughts on it. Any like way that I can improve and stuff like that, because I'm always looking for ways to improve and cater towards people that are trying to learn from me. Right? I want to be as clear and concise as possible. What a beautiful trade on the 5 minute though, highlighted earlier. Stalled inside that 1 hour unicorn, and then we got an expansion, and then we got that turtle soup set up. You know what I'm saying? Right here. Why is this turtle soup? SMT divergence, right? Beautiful. Any long all the way up here. Really you love how it go all time frame all the way down to tier. Okay. Oh man, I need to take a breath. That was like intense. Like I swear, whenever I trade management, like do trade management, it's intense. Daniel, I think overall is just understanding the underlying higher time frame narrative. Uh, like for example, this is what I highlighted in Tuesday's stream, I believe. Let me see if we hit it. Just make sure. Oh yeah, we actually did hit it. So I don't know. To be honest, oh actually I know. I know what you're missing. Higher time frame PDRA. That's what you're missing. If you're shorting, where's the higher time frame PDRA? 4 hour to 15 minute to 1 minute, right? What I did was 1 hour to 5 minute to 15 second. Snows, honestly, we're gonna get you there. I know you know a lot. And I think that's the problem, is that you know a lot. It's just like from watching you for like the past 2 3 months, like I know you know a lot, trust me. But sometimes knowing too much is not good, right? It's like how I treat learning now is like I have a model, but whenever I learn that's new, I take it with a grain of salt. I take it as education and entertainment. So I mix those two together because I genuinely love trading. So it's like learning trading is like it's just entertainment to me. When I'm eating, I'm watching trading videos and stuff like that, right? So then you begin like watching these things for entertainment and you're like, "Oh, this is how what I've been using actually works." And let me tell you how I love to learn is, let's say I want to learn projections, okay? Who's is the master of projections? Okay, I think Dexter Lab is really good at projections, so I learned from him. Who's really good at simplifying ICT concepts? I need to learn the absolute basics of ICT concepts. Well, Casper is really good at simplifying those concepts. I learned from him, right? Um, who is the absolute root of all these concepts? Oh, well, ICT is the absolute root. So I will learn from ICT for that purpose. Do you know what I mean? Um, let's see, who's the master of time in the markets? Then you have Trader Day, right? So that's why I'm learning from Trader Day, because he has quarterly theory. He goes so in depth with it. And I don't understand how people can hate on his mentorship because I'm loving it. Like if you're hating on it, it's not because he's not providing enough in the mentorship. It's because you're not spending the time to study. Like, I can teach you a million things, but if you don't study it, then there's no point in me teaching you that. He doesn't have coursework in the mentorship. He teaches you a lecture. He gives you one concept at a time. That's what I love. He gives you one concept at a time, and then you go in your charts, you study that one concept, and you realize, oh, this goes with that, and that goes with this, and I can use that with this, right? It's just all pieces to a puzzle, and you can fit it all together. Why? Why are some people so good at discretionary trading? It's because they understand how a lot of things work. They understand how a lot of things operate, and when they work together, even better. At the end of the day, high probability trading is just confluences. That's all it is. I have fair value gap breaker block, unicorn model. But what is it really? It's just confluences. Confluence of a breaker and a fair value gap. That's it. It's just a confluence. I could use mitigation block, fair value gap, breaker block together, even higher probability. Confluence, right? Order block with fair value gap. High probability order block. Why? Because it's coupled with the fair value gap. Let's take a look. So if we're expecting DXY to be bullish, then we can look for EURUSD to be bearish. Correct? Let's see if we tapped into the level I was looking for. Oh, we didn't, unfortunately. I noted this last night because I wanted to swing this all the way down, but looks like it's already starting to go. So if we're looking in terms of DXY and EURUSD, I can't delete that for some reason. It's fine. 1 hour breakaway gap. Yes. I would say this looks like a decent breakaway gap because right here you have a unicorn, an hourly unicorn right here, and we're reacting very nicely off of it. This is what you want to see when a unicorn is working, okay? Is that once you tap into it, you start moving, okay? It's really good already. What else do you have? No SMT divergence. Never mind. That's something I would probably look for. GBP USD. There's a SMT divergence on the highs. If you look right here, there's a SMT divergence. Even better. Confluence. Right? So now you're working with a higher time frame PD array. You're working within a SMT divergence. And then you're working with a market structure bound price range or whatever you want to use. So really good trade. I think this is a solid trade. Same trade idea I had. Of course, nothing's guaranteed, but I think that this trade is very good. Sean, so how I like to study is essentially step 1, what am I looking for? Okay, you have to understand what you're looking for. There's people that just hop straight into FX replay and be like, oh, I'm going to test this right now. Like, you don't even know what it looks like. You were just taught it. You don't know what your setup looks like. You don't know how that concept works with the market. So step 1, hindsight charts. I don't care who tells you, hindsight charts is so important because if you don't even know what your setup looks like, how are you going to anticipate your setup? You know what I mean? So step 1, hindsight charts. Always annotations, hindsight chart. Okay. Number 2, you can start going back test it. Okay. Normally, I don't backtest, to be honest. I don't backtest a lot. I just do hindsight charts and tape read. Okay. Live markets are your friend. Okay. That's your best friend. The greatest teacher is the live market. Mark Douglas is psychologist, very famous psychologist, and or at least I think he's a psychologist. He just does trading psychology, and then ICT's mentor is Larry Williams. But yeah, I'm pretty sure that's the trade of the day, guys. So, I really hope you guys enjoyed the stream today. And tomorrow we'll have a weekly review of the earlier trades I took this week, because this trade I feel like you don't need a review since I was like reading it the whole time. So I'm gonna you guys are the premium members. So how do you guys feel if I clipped my trade management and posted it on YouTube? How do you guys feel about that? Or does that feel like you guys are being cheated? Perfect. Thank you guys. I appreciate that. I just don't want you guys to feel like, oh, it's we paid for this. You know what I mean? Like, all right, perfect. All right, thank you guys so much for coming by, and once again thank you guys for having faith in me to teach you guys, because that's like such. I don't want to be cheesy about it, but it's honestly like a honor. You know what I mean? To like have people trust you to teach them. So thank you. I appreciate that. Other than that, once again, thank you for coming by, guys. And this will be uploaded to WAP shortly if you want to review it. Um, yeah, really good stuff. I would say stay safe for the rest of the day. Potentially we could go for these highs, but for like even looking at price action like this, like is this something you want to trade or it's not? It's not. You know, it's not the best. So I would just tape read it, to be honest. Next week's, I don't want to say definitely, but like most likely going to be a lot better. So yeah, take care, everybody.